Oh, Alibaba, the stock is down 48% in the past year, even after the 9% uptrend yesterday, and the stock keeps getting even more attractive every day. Hello everyone, welcome back to the channel. Today we are going to talk about Alibaba, as many have mentioned and asked for this video. So we are going to talk about the downturn, what I think about the company, and any recent news around it. If you're new to my channel, welcome. Please consider subscribing and smashing that like button, since it really helps the channel out. Now, I decided to make this video because the stock is down even more since my last video, and the valuation is looking even cheaper and more attractive than a month ago. First of all, one of the most recent news and why many have become so bullish is because of Charlie Munger. He is basically a vice chairman of Berkshire Hathaway, a well-known billionaire just like Warren Buffett. Even though Munger has mostly invested in American companies such as Coca-Cola and Costco, investing in Alibaba took us all by surprise. He first bought back in Q1. He bought 165,000 shares, and as the stock has dropped so much since then, he literally almost doubled its position during Q3, as he added 82.71% to its position at a price of $148 per share. Huge position, but we do have to take into consideration that the Daily Journal is a very small portion of Charlie Munger's entire wealth. The vast majority of his wealth is in Berkshire Hathaway. So yes, Alibaba represents about 20% of its Daily Journal, but that does not mean that it represents 20% of its total portfolio or total wealth. He has a total of 302,060 Alibaba shares as of Q3. At today's price, that is $156 per share. That is a total of $47 million, which according to Forbes, he has a total net worth of $2.2 billion, meaning that Alibaba is only about 2% of its entire wealth. Still, I have to say that obviously it impresses me that he is investing in this company, but as Warren Buffett always say, we should be greedy when others are fearful and fearful when others are greedy, and that is what he is doing right now with this stock. Right now, he is doubling down its position as it has dropped a lot, and I assume he believes that he will see a pullback coming up. Now, we all have seen that the Chinese government is making rules and regulations against certain companies, and they are known for taking money from the most successful companies and people and then distribute it to their economy, just like any other communist country, which is why Alibaba warns investors of higher taxes as China crackdowns widens. This will obviously add billions of dollars in cost for Alibaba, as the Tmall operator forecasts an effective tax rate of 20% for the September quarter, up from 8% a year ago, and obviously that affects the company's earnings, which many investors did not like at the moment. Now, I'm very sure many of you have already seen what Ray Dalio had to say about the Chinese economy. Basically, he believes that investors are misunderstanding what is happening in China right now, as the Chinese economy growth has been incredible over the past years and is expected to continue massively growing, which obviously companies like Alibaba will take advantage of it being such a big company for the Chinese economy. Even at the beginning of the year, we were seeing that new charts shows China could overtake the US as the world's largest economy earlier than expected, meaning that China could overtake the US as the world's largest economy in the coming years and earlier than people expected. But then Goldman Sachs cuts China's growth forecast, and Bank of America as well under Evergrande shadow. But coming back to what Ray Dalio believes, he believes that we are misunderstanding what is going on in China. Dalio urged investors to understand that Chinese regulators are figuring out appropriate regulations to rapidly develop market environments. So when they are changing fast and aren't clear, that causes this sort of confusion, which can be misconstrued to be anti-capitalist moves. Assume such things will happen in the future and invest accordingly, but don't misinterpret misinterpret these wiggles as changes in trends and don't expect this Chinese state-run capitalism to be exactly like Western capitalism, he concluded. But then we see an economist called George Magnus who believes that Dalio is wrong and believes Dalio is saying this because he got a big business in China. Now, this is a kind of situation in which we don't have anything to do other than believe in what we want to believe and invest according to it. It is impossible, at least for me, to know the truth behind all this. If Dalio is really doing this because of his business or because he really believed this or not. To be honest, I understand China is a communist country as of right now, and they could easily take money from the biggest companies to distribute to their economy, affecting companies' earnings. But the truth is also that their economy has been growing a lot lately. This is definitely an extra risk, but we cannot deny Alibaba's current valuation because of all this. The stock market just opened and Alibaba stock is up over 2% as it is trading at $160 per share with a market cap of $434 billion. It has a 4P of 14 and a price to sales ratio, a beautiful price to sales ratio of 0.56. Obviously, it looked even more attractive 2 days ago when it was at $135 per share, but believe me that it is still a good price in my opinion. We still have to wait and see if it has turned bullish and will continue rising, or if it will be like the last time that it went up 10% and then down 20% more. Now, what impresses all of us the most is that Alibaba fundamentals continue growing while the stock drops more and more, completely ignoring its fundamentals as revenue goes higher. Here we can see that the year over year they have had excellent growth, never stopping, while their stock continues to drop. Many were worrying that the stock could get to the lowest point it got back in 2018, but it bounced perfectly at almost the same price back in October 2018, meaning that the stock have almost lost 3 years of uptrend in the past months because of everything that is going around in China. 3 years of uptrend were deleted within months in this company, and obviously it makes it very attractive because the company grew massively during those past 3 years. Obviously, we still gotta wait and see if we see higher highs before it confirms its uptrend, but it is nice to see it going up. Even with the acceleration in growth they had in 2020, they are expected to grow 27% this year and 19.50% in 2022. If you ask me, the market is currently pricing Alibaba as a failing business, and I think it is because many are fearful and are being cautious with China, which is normal to be honest. I still don't believe China will let such a big company die, as it represents so much to their economy at the moment, as almost 70% of their population are active users of Alibaba's platform. Yes, they will get affected by the raise in taxes. It will affect their cash flow and profitability in the short term, and many investors are factoring that in. If anyone would like to have exposure to the Chinese market, then in my opinion, Alibaba might be the best option. Disclaimer here, I'm not investing in Alibaba right now because I have a risk limit and I'm almost it with my other investments. But I have to say that I have been thinking a lot about investing in Alibaba. I used to invest in Baba before, I sold for a profit. I love their business and what they are projecting for the future. I believe the company will continue seeing a massive growth in the coming months and coming year and could convert into one of the biggest companies in the world. I do believe they still have a long path of growth and a lot of future potential, but I would not let this be a big position in my portfolio, not more than 5 or even 3%, as I understand the risk it comes when investing in a Chinese company, not because of a growth company, but a company from China. Ray Dalio might be right and we might be misunderstanding or misrepresenting what is happening, but I have read a lot about communist governments and China is one of them. I'm not saying they will harm Alibaba, as I believe they know that they need Alibaba for their economy right now, but the government is able to do whatever they want, whenever they want, with whoever they want to. It is just my opinion. I will think about opening a position in this stock again, as we all know that it is very, very cheap right now, but being very careful with the possible consequences. Thank you and see you next time.